Hello everyone, welcome back to Upside Down Data. Today I want to talk a little bit about the behavior of the market over the last couple of days. Now obviously this behavior has been pretty much all been driven by the events that's going on with Russia and the Ukraine. Now I'm not a geopolitical expert, so I'm not going to be giving my take because I just don't feel like I have a whole lot useful to add there. But I do just want to talk about how the markets have been behaving as these events have been playing out. So where I wanted to start was with our trend confidence indicator we have here at the channel, which is designed to basically help assess how healthy a given trend is, right? So scores above 0 are kind of things that lead on the bullish side, things below 0 leaning on the bearish side. And the idea with this indicator is that if you're in an uptrend and things are green, that's great. You know, that means the trend might be healthy. If you're in an uptrend and things are red on the TCI, that's not so good. That means that uptrend might be coming to a halt. And then the opposite in a downtrend. You know, if you're down in red, that means the downtrend is probably going to continue. If you're in a downtrend and things flip green, that might suggest that upside might be coming. So I'd actually put out a video actually right before the conflict in the Ukraine kind of started, or the invasion began, back here. And I had said at that point that I was concerned about where Bitcoin might be going, because we were trending right down to the 0 level at that point in time. I think we were trading at around 38K or so when I made that video. And so I expressed short-term caution. It was concerning to see us dipping back down to that level. And what I was basically saying was that, you know, it would not surprise me if short-term downside happened. And of course, you know, with the kind of the beginning of the conflict that ended up happening, we got a lot of downside. But what's important to notice is that we never actually closed in the red, right? Because we, you know, price actually rebounded, and we actually have now closed green off of that day. And something I noted in that previous video is that closing red on the TCI is really where you want to be kind of more concerned, because every single time we've done that, more downside is followed in recent history. So, you know, closing in the red, more downside followed. You know, closing in the red, more downside followed. Closing in the red, more downside followed, et cetera, et cetera, et cetera. So basically, from my perspective, if we closed red down here, that would have been a very bearish sign that more downside was likely to come. But that actually didn't happen, because we ended up recouping that downside that we ended up realizing in that very much in the short term within that day, ended up closing higher. And now we're actually moving back up into the green zone in the TCI, which is, you know, I think can be seen as more of a bullish sign. It's basically the TCI is saying it thinks we're more in an uptrend than a downtrend right now, or this looks to it more like an uptrend than a downtrend. So it's more confident of it being an uptrend than a downtrend. So certainly kind of a bullish possibility right there. So one thing I did just also want to note is this is the current level that the TCI is watching. So one of the nice things with the TCI algorithm is you can actually kind of probe it, kind of get it to tell you what exact price level it's watching as being this kind of critical cutoff level, this 0 point. So right now it's right around 37K. So this is a dynamic number, it's always changing. So, you know, don't take the exact number too seriously. Just, you know, around the 37K range is what it's watching as being that kind of critical cutoff zone. And we're currently trading nicely above that. So that is a hopeful sign from that perspective. So another thing I did just want to note here was just what's going on with the price action, and specifically I want to look at volume here. So what you'll notice is on this day yesterday, you'll notice this kind of abnormally high buying volume, right? So this abnormally high green volume for kind of within the last few months, really. You know, we haven't seen, the last time we saw a candle like this was really this local bottom we had here in January, and this was even lower than what we had here. You know, really to find a similar point, you kind of have to go all the way back to this candle here coming out of the summer to see a similar amount of buy side or green volume kind of bar here, as on this day here, June or July 22nd rather, which then spurred off this big rally, or began that kind of it was near the beginning of this big rally that took us to all-time highs. So that's just something I think is notable a little bit. And the reason why volume can be interesting to look at or notable is that it can tell you about what happened on that day, right? So it tells you that there was a lot of people trading on that day, right? So, you know, volume, that's just literally what it means, how many trades were happening. So there's a lot of trading that occurred on this day. But because we ended up green, what it suggests is that even though we had this kind of really high sell side volume, a lot of people were kind of selling into the fear that came on the day yesterday, there was enough demand, there were enough kind of buy side volume to take it back up, to scoop up all of that selling that happened, and then actually end us up at a higher point than where we started. So we actually kind of not only absorbed all the selling pressure, but actually there's more buying than selling pressure, which actually drove the price up. And that is generally, that can be seen as kind of a bullish thing, that there's enough market participants willing to enter in and buy the asset so much that they were able to absorb all the people who were looking to sell at that price point. And so, there's kind of overwhelming demand at this current level. And of course, the opposite happens in these high red candle days, right? These are days where there's a lot of selling that's happened and there's not enough people stepping in to buy, and so price just falls. You can't, the selling pressure overwhelms the buying pressure. So that's why this could be seen as a bullish sign when you get this really high volume kind of green candle right here, because it suggests that there, at least at these levels, there are enough people to overwhelm anyone who is looking to sell at that point, which then can mark the beginning of an uptrend. Even just from the January low, we rallied up to around 40% off of there. Now, of course, this is not to say that we're guaranteed to do that again off of here, right? There's no guarantee this has to spark some big move to the upside. We can look back in the summer to see an example where we also had a really high green day here, which did see some upside off of it, right? Nothing to sneeze at. This was actually about a 27%, but then, we had to go back down and retest those levels again. So even if we do see a rally off of current price levels, doesn't guarantee that this is going to be the rally that takes us to all-time highs, or even necessarily that it's going to be the rally to really be that kind of big relief rally up to higher levels that a lot of people have been looking for. But certainly it's a good sign, right? That in the past, usually you do see some kind of upside after this day. But the other thing that's important to note is that there's going to be resistance we're going to hit, right? We're going to hit resistance again at around 40K, probably going to hit resistance again at around the 50K range, if we can break through this. So not everything is just, it's not just purely clear skies ahead and nothing to worry about, right? So, if this can continue, there's going to be resistance along the way, if it does even continue at all. Anything can happen. Because, right now, one of the issues with the crypto market that makes it more uncertain than we were back, for example, in the summer, is that the macro picture is just obviously very different right now. The macro picture is a heck of a lot more bearish right now than it was during the summer when the stock market was quite bullish. So I think that is important to note. Now, if we do flip over to the stock market, I'm showing you here the NASDAQ. We saw kind of a similar story to Bitcoin in some ways, where we had this, big kind of sell-off earlier on, kind of as the news was all breaking. But then we rallied back up, and then we actually closed above that previous candle on the day before. Or, sorry, we didn't close above it, but we've now rallied past where that was. So, and the same thing is true with the S&P 500. Now, of course, I think it's a little bit, again, too early to say this has to be the bottom. Certainly if we look at some key moving averages, we're still in an overall bearish position, right? We're still below the 200-day moving average on the S&P 500. We're still below the 200-day moving average on the NASDAQ. So certainly to just be, cracking out the champagne now is, I think, way premature to say this has to be the bottom on these. But certainly this is a good sign, right? What we really didn't want to see is these cratering, just really tanking down to the downside. And that didn't happen. So for now, equities have held up to some degree, although we did set lower lows on each one, so that is something to be concerned about. Really what you probably want to see is just be able to set, kind of being able to go up and then start setting in higher highs, higher lows, higher highs, higher lows again. Same thing with Bitcoin. Coming off here, what I'd really like to see is just be able to clear past this level, and then set in a higher high, then probably had to set in a higher low, etc. And that would be kind of a nice bullish structure to maybe suggest a more sustainable uptrend pattern that we might see. But it's a little bit too early to tell. But certainly, kind of where I'm sitting right now, this went better than it could have in a lot of ways, and I think better than a lot of people expected. So doesn't necessarily mean the bottom's in by any means, or that we're saved from some kind of a bearish scenario, especially if the macro gets more bearish from here. But in the short term, I do think it's totally plausible that we see another kind of move like we have in the past, where when we've seen these really high volume green the kind of days where we have these big wicks and then we close back above, usually some kind of upside has ended up following from that. So I think it's reasonable to suspect that could happen again. We're already rallied a little bit more today, But I think it's reasonable to expect that that could continue. And the TCI also is kind of still leaning bullish. But who knows? Short-term price predictions are very difficult. But overall, I think it is heartening that we did set in a higher low. That's good to see. I'd like to see a higher high and then followed by a higher low again. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the TCI and the UDPI and our other indicators, we're all going to make it.